Welcome to Vibra Finance. My name is Lindsay, and in this episode, I will be talking to you about dollar cost averaging into crypto. Investing in a crypto can be tricky. The complexities of deciding what to invest in, when to double down, and where to hold cash can be amplified by the volatility in this market. To avoid banking on the perfect time to buy, beginners, seasoned investors, and even some experts have used the strategy of dollar cost averaging to enter the market. So, in today's episode, I will explain what dollar cost averaging is, what are some of the benefits and drawbacks to this approach, and steps on how you can adapt a dollar cost strategy today. So, first, let's start with what is dollar cost averaging? Dollar cost averaging is an investment strategy in which an investor evenly splits investments into periodic purchases regardless of the asset's price. Investing in smaller amounts over time means that you'll buy both when the price is high and when the price is low. In turn, this smooths out your average purchase price. So, dollar cost averaging is popular in crypto given how quickly prices go up and how quickly prices go down over a short period of time. So, the basic idea is that you spread out your investment into equal parts over regular intervals instead of trying to decide the perfect time to buy. So, how does it work? Dollar cost averaging, it's important to start off by remembering that when investing into Bitcoin, you didn't need to buy a full Bitcoin. Despite what so many new investors thought, you will often purchase a small fraction or amount of one Bitcoin. So, say you have $500 to invest in Bitcoin. Instead of buying $500 worth today, which would be about well, we'll do the math on that one. If you were to adopt a dollar cost averaging strategy, you would buy $50 worth of Bitcoin every week for 10 weeks to diversify your entry point and spend the same $500. So when the price of Bitcoin is high, you'll only be able to afford a certain amount of Bitcoin with your fixed amount of investment. And then when the prices drops, you'll be able to purchase a little bit more. So as a result, when the market stabilizes, this evens out your purchase price and you'll benefit from having more Bitcoin when you buy them at a lower price or any other asset for that matter. So what are the main benefits to using a dollar cost averaging strategy? So there are so many benefits, but some of the key points are that it saves time and effort. When you're trying to time the market constantly, you're refreshing portfolios, you're reviewing price fluctuations, and that can be time consuming, not to mention nearly impossible to get it right, unless you have a crystal ball. I wish I did. Dollar cost averaging gives you this time back to focus on other areas of your life, particularly if you set up something with an automated pay system. So, also another key point of a benefit for dollar cost averaging is that every investor is prone to acting with their heart and not their head. So, with the volatility of crypto, the risk of allowing emotion to take over can lead us into neglecting trade plans or potentially investing more than you can afford. So, dollar cost averaging advocates that you wait several years for your assets to appreciate and then you can better weather short-term volatility in exchange for long-term gains. Another benefit is the potential long-term gain benefit. So in some places, crypto profits from short-term gains get taxed less favorably than long-term gains. So this plays a significant role in your total returns. A long-term approach shields your funds from taxes, and if you wait until you're ready to retire before selling your assets, you'll pay even less tax. So those are some things to consider. Using a dollar cost averaging strategy in a bear market. This is the time when you can so in a bear market, while dollar cost averaging can be used like across any market, such like in a bull market when prices are rising, and in the bear market and prices are falling, utilizing the strategy to survive during a down market or a recession can be particularly powerful. And so how does it actually work? Okay, so while you should avoid making investment decisions based on what others are doing, many other legendary investors embrace a dollar cost average strategy instead of timing the market. So you can look at strategies that other people have already implemented and decide whether or not you are looking at them as though they could be a mentor for a plan of yours. Some disadvantages to dollar cost averaging could be time. It takes a really long time to build up a position if you're investing small amounts regularly. And um, DCAing, you could miss out on a moon if you have when you stick to your plan. You're not going to be paying attention to the micro highs, micro lows. So if an investment that you're investing into never goes down, you may have been better off just buying it all at once. But that's why we spend time in the market so that we can plan these things out accordingly. So, how can you get started? First step is to choose an amount to regularly invest. It could be a flat amount, it could be a percentage of your paycheck, or it could be whatever you choose, whatever is unique to you and fits within your lifestyle and helps you to achieve your goals so that you can continue to set yourself up for success. It's really important to choose an amount that you can sustain, and remember to only invest what you can afford to lose and not what you need access to in the short term. So you're also going to get started with dollar cost averaging by choosing your assets. You can choose one to build with, you can choose two, you can choose many. Do your research and look at the assets that you're looking to invest into to see what the long-term play will be or what will be most beneficial to you and your plan today. And then also another strategy you can use to get started with dollar cost averaging is to choose a purchase interval. So choose once a week, once a month, every day. Like I said, whatever fits you and your plan the best. So hopefully in this episode, we went through dollar cost averaging, giving you the what, the why, and perhaps the how. And these are all not financial advice. It is mere for your entertainment purposes and perhaps for you to do some reflection. If you're interested in getting started with crypto, but you don't know how, Viber Finance has created a workbook, Getting Started with Crypto, 8 Easy Steps to Success. We will walk you through step by step how to get started safely with crypto, how to custody your crypto so that you can continue to participate in this market and execute your DCA plans. Until next time.